Welcome to The Explainer. Today we're unpacking a really fascinating and frankly often frustrating paradox in the e-commerce world. Imagine this. You build a perfectly legal, fully compliant business, you pour your heart, your soul, your capital into getting it off the ground, only to find yourself literally blocked from taking your customers' money online. For firearms and related businesses like ammo and accessories suppliers, this invisible financial barrier isn't just some theoretical problem, it's a harsh, everyday reality.
So it really begs the question, right? Why do perfectly legal businesses get completely blocked from taking your money? Well, we're about to navigate a really strict regulatory and financial obstacle course, and it's one set up by ultra-cautious banks. Even with the absolute best intentions and a flawless transaction history, business owners in the space constantly hit a brick wall. So let's break down exactly why this happens, look at the hidden mechanics of high-risk merchant accounts, and, most importantly, uncover how to actually solve the problem.
Okay, let's dive into this. We've got 5 specific hurdles to cover today. 1. The high-risk label. 2. Avoiding brand risk. 3. Reputation and credit. 4. Strict ATF compliance. And 5. Specialized payment processors. Let's get to it.
Section 1. The high-risk label.
Right out of the gate, you have to understand that banks are fundamentally risk-averse. The whole concept of a high-risk account hinges on broad industry characteristics. This is entirely regardless of an individual company's own flawless transaction history. When underwriters look at a market, they're basically scanning for landmines. If an industry historically deals with higher rates of chargebacks, fraud, or if it faces significant public scrutiny, controversy, or even just sudden government regulations, well, the banking world gets very nervous. They essentially paint the entire sector with a massive, cautious brush.
And the firearms industry is far from alone here. Just look at the other businesses grouped under this umbrella of financial caution. You've got perfectly legal, everyday businesses lumped together simply because of elevated statistical risk. Adult entertainment, tobacco, and gambling are sitting right next to travel, hospitality, and even legal and financial services. What do they all share in the eyes of a bank? It's that potential for unpredictable complications. That could be a canceled flight leading to thousands of chargebacks or a sudden shift in regulations. This broad, indiscriminate categorization is the foundational reason why securing a standard merchant account in these sectors is so incredibly difficult.
Section 2. Avoiding brand risk.
Now, card networks are incredibly strict about avoiding anything that even hints at potentially illegal activity, or honestly anything that could just harm their brand. They are heavily monitoring optics, and this brilliantly illustrates the point. Look at the contrast here. A massive red flag, ambiguous marketing copy. For example, if an e-commerce website enthusiastically lists an 80% built receiver as ready to fire, that sheer vagueness totally terrifies a sponsor bank. Why? Because it flirts with crossing legal boundaries. The green light, and really the absolute necessity for these merchants, is precise, accurate labeling that strictly adheres to federal and state laws, like the ATF's frame or receiver traceability rule. In this world, precision is safety.
So the crucial takeaway here is that you must keep everything completely above board. Taking the time to really audit your website and scrub any ambiguous text from your product copy is a vital step. At the end of the day, a bank declining an application for a firearms merchant account isn't some personal vendetta against the business owner. Not at all. It is primarily about ruthless risk reduction. If your website even hints at non-compliance or sloppy marketing, your application is literally dead on arrival.
Section 3. Reputation and credit.
In today's digital world, underwriters look super closely at your online reputation. It's remarkably tough to be seen as a genuine, safe business without a highly professional digital footprint. Banks want to see a secure, well-designed, modern website that just functions smoothly. It sounds harsh, but a long string of bad customer reviews signals poor customer service to an underwriter, and that directly signals a much higher risk of impending chargebacks. They're also going to verify that your business is listed on credible directories with accurate, up-to-date profiles. It's basically a mandatory background check to prove you're authentic before a bank will even consider saying yes.
Then, beyond the digital reputation, there's the personal financial side of things. A bad personal credit score or a spotty transaction history is a massive red flag. To a bank, it just screams that a business might struggle with chargebacks, fraud, or paying back loans. But there are practical maneuvers to clear this specific hurdle. First, take active steps to improve your credit long before you even fill out an application. Pay down debts, resolve any disputes, or if you're short on time and that credit history can't be fixed overnight, you can have a business partner, a spouse, or a family member with strong credit co-sign the application. That can instantly improve the overall financial profile.
Section 4. Strict ATF compliance.
This is absolutely crucial. Merchant account providers will heavily audit a company's strict adherence to ATF requirements, and there is literally zero wiggle room here. They're looking for regular, documented checks using the National Instant Criminal Background Check System, the NICS. They want to see consistent, flawless verification of 4473 forms to make sure buyers are actually legally permitted to purchase. They mandate an up-to-date federal firearms license, along with rigorous inventory control and persistent, long-term record keeping. Missing any of these specific requirements is going to practically guarantee an application denial, especially in the e-commerce space.
And here's a really effective practical solution to signal that level of compliance right up front. A huge best practice is to clearly state, right there on the home page or the checkout page, that your e-commerce store only ships to FFL shops. This simple but vital piece of website text acts like a protective shield. It clearly demonstrates full regulatory compliance to any underwriter reviewing the account. It shows you know the rules, and more importantly, you enforce them.
Section 5. Specialized payment processors.
You know, this quote from Adaptiv Payments perfectly hits the nail on the head. It validates that immense frustration business owners feel when they're trying to do everything perfectly right. Standard, household name payment processors like Stripe or PayPal, they often reject these accounts outright because of their broad, automated risk models. They just aren't built for nuance. And this intensive scrutiny is exactly why high-risk businesses simply cannot rely on standard off-the-shelf payment gateways. They need specialized high-risk providers who actually understand the intricate mechanics and the legal realities of their specific market.
So, what do these specialized processors actually bring to the table? Well, providers who focus on high-risk industries step in exactly where traditional banks back out. They offer advanced fraud prevention and chargeback protection, which we now know is the absolute foundational fear of the banking sector. They offer tailored solutions to fit the strict regulatory needs we just talked about. And crucially, they provide dedicated human support representatives, no automated chatbots. When you're dealing with complex compliance, you need a real person on the phone. These are the specific features that safely bridge the gap between a legally compliant business and secure e-commerce transactions. We've seen exactly how the banking world views risk, the intense scrutiny they place on compliance, and why specialized financial tools are an absolute must. So I'll leave you with this to think about. In a world where we expect instant, frictionless payments with just the top of a screen, are you fully prepared for the strict, invisible hurdles of high-risk commerce? Understanding these hidden mechanics isn't just about getting a single application approved, it's about fundamentally understanding how the modern global banking system regulates the industries it serves. Thanks for joining me for this explainer, and keep learning.